Hello everyone. Happy Monday to you. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition. In fact, our first edition for the new week. Before we kickstart, let's run through our daily routine. Let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice very clearly without distortion, please let me know in the comment section by typing in hi. So, seeing hi in the comment section will make me will confirm that we are all good on the same page. So, I would like to see some feedback, please. Thank you very much. All right, so I can see an handful of comments here. Okay, 3416 566 2653. Hello, flagship. Good morning. Princess Boss, good morning to you. All right, thank you very much. All right, Carrie, thank you very much. Okay, so I think on this note, we are good to go this morning. So I welcome you all once again to yet another promising edition of the Extra Speed Live with Sheriff Daramola. In preparation for the new week, I have conducted a comprehensive analysis on a handful of assets that I'm willing to share with you guys this morning using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of this asset. So I have like four, five, six assets. Let's see if we can run through that before the end of the session. And since today is the first trading day of the week, if you have any financial instrument you want us to look at, be it cryptocurrency, currency pairs, commodities, options, whichever case it may be, you can drop it right in the comment box and I will try to incorporate it into our plans for the week. And of course, this will be one of the assets we shall be monitoring throughout the course of the week. So if you have any, please let me know in the comment section. For those who are joining us for the first time, you're highly welcome on board, and you might be wondering that what is it that you're doing here? Well, as technical traders, we come together as a community on a daily basis in anticipation of the New York session, where we come to do a review of the assets if we have any running on our watch list, see how we manage our existing positions, and of course, strategically position ourselves for trading opportunities prior to the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I encourage you to stay tuned in to the end of the session so you don't miss out on any of these insightful ideas we shall be sharing here, and of course be part of our subsequent editions. As the more time you spend with us, the better you get to understand how things works here and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, you are all welcome on board. So with that being said, here we shall be diving right into the business. And as usual, for those who know how we do it in the morning, the first thing we want to be doing is to check on the economic calendar. And of course, we know how these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can enable us to position ourselves in such a way that we can capitalize on any potential opportunity prior, during, and even after this event. So on the economic calendar, based on the asset I have on my watch list, we shall be focusing on high impact events from the United States, the United Kingdom, and the Japanese economy. Now, on the economic calendar here, after looking at it this morning, I realized that there are no high impact events for today and tomorrow. And in fact, I went further to include medium impact event for today, September 18th, but there are not any. So what we are going to simply do here as technical traders is to go back into the chart, look at things from a technical standpoint, and rely on our technical skills to position ourselves ahead of the New York session today. Now, with that being said, let's dive right into the business. And as usual, the first asset we are going to be taking on this morning is going to be the US All Spot. Now, on the US All Spot, first of all, I would like to congratulate everyone. In the last couple of weeks, we have been buying this asset. We kept on adding more positions to our existing trade as we continue to maximize the potential of that bullish move. So congrats once again to everyone who has been part of this profitable journey. Now that we're heading into the new week, what is going to be our plans for today? How do we intend to anticipate potential trading opportunities? Is market going to continue to the upside this week, or are we likely going to be seeing some profit-taking activities which goes inside some sell-off that could push price to the downside? Now, for us to have a better perspective into what is going on here, we will need to first of all scale up into the higher time frame where we want to be seeing things from an holistic standpoint. And what I did while preparing for this week was to look at the 4 hours time frame where I was able to take into consideration the nature of price action in the last 2 to 3 weeks. And on the 4 hours time frame, the first thing you would observe here is the fact that price has been on a strong bullish momentum. And to further emphasize the strength of the buyers in this market, you will see that we connected a series of higher lows. And in fact, as a result of this, we have a couple of ascending trend line which further buttresses the strength of the buyers at this point. And you all know how we do it in this community. Whenever we have an ascending trend line and price remains above the ascending trend line, we want to continue to look out for patterns and structures that will support the idea of buying that asset. And the only condition that will make us want to consider selling is when price breaks down that ascending trend line. Now, let's zoom right into what has been going on here in the last couple of weeks. And if we do that correctly, I was able to identify a level here at the $90 area, which is a strong psychological area considering the round figure of that price, as my key level for this week. And what do I mean by key level, and how important is the key level for us in this community? Now, for those who have been with us for a while now, you know how we use our key level. Whenever price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And if price drops below the key level, you want to be looking out for patterns and structures that supports the idea of selling. Now, in the case scenario here, looking at what has been going on throughout last week trading session, we saw here that the highest point for last week trading session was around the $90.50 level. So I was able to identify a resistant line there where I said I will be looking out for the breakout of that structure to join the uptrend continuation. Of course, price still remains above our ascending trend line, and what we want to be doing here is to continue to look out for more opportunities to capitalize and maximize the potential of that bullish move. Now, with the information we've gathered here on the 4 hours time frame, it is quite clear that we need to see how market participants will be reacting to this key level at the $90 area during this week to see what our next line of action will be. And in fact, while looking at the structure this morning, we were able to notice a pattern as the market opens on the US All Spot. So let's run through the 1 hour time frame. Now, on the 1 hour time frame, this was what I was able to spot here. Hold on a second, let me extend this. Let me bring this back into the screen. All right. So, as at the beginning of this week, we saw here how market started on a bullish note in this market. So price started at around the $90 area. Let's hold on and see. Price started around the $90 area this morning and climbed up, leading into a scenario that broke out of that $90.50 level. Remember that level we identified on the 4 hours time frame as the resistance line for last week's trading session. Now that we have a breakout of that resistance line at the $90.50 level, is this going to be a platform that will incite an uptrend move? As we have now seen here that buyers have the potential of pushing price to the upside. Now, with this scenario, we saw what happened afterwards. Price dropped back, coming back into the support line again, and we saw some attempt by the buyers around this area with the intention of pushing price further, since they've already broken out of that resistance line once. So there are chances that they could still gain the momentum to push price further to the upside. So in that regard, I'm going to be having a buy stop order anywhere above the $19.50 level. That is the $90.50 level, where we shall be looking at an opportunity to join this uptrend continuation. And if price action continues to climb up, we also have another level that we shall be using to capitalize on more opportunity. Now, if you look at the structure, we can see here that we have another high here. This is the highest point where price action has been for this week, and that is around the $90.80 level. So we should be marking this one to out on our chart, as we shall be using it to capitalize on the uptrend continuation. So if price goes on to break out of the $90.80 level, then we had more opportunity. So if price breaks out of the $90.80 level, then we will be having minimum of 2 positions running at that particular point in time. And please remember that for every decision you are making in the market, ensure you have your stop losses in place, as every decision we are making is such an educated guess. We are just leveraging on the edge we have on the market. Now, in as much as what we are looking out for buying opportunities in this market, we also want to take into consideration the potentials of the sellers too. That is how we've normally been doing in this community. We want to be as dynamic as possible. We all know how the financial market is a fluid environment, and for us to be profitable, we want to be on standby to capitalize on every move the market is dictating and projecting to us. Now, in this case scenario, what is it that we are going to see on this chart that will make us want to start considering selling? Well, with the scenario we have here, it is quite clear that price still remains above our ascending trend line, and of course the only thing that will make us want to be selling is price breaching that ascending trend line. And for price to breach that ascending trend line, it needs to break down that key level situated at the $90 mark. Now, if price will break down that key level, a retest of structure will be all we need as confirmation to join the downtrend move. So to give a visual representation of what I'm talking about here, the only condition or criteria that will make me want to be selling the US oil today is for price to break down both the $90 level, then the ascending trend line, where we will wait for confirmation like retest of structure, giving us signs that buyers are finding it difficult to climb back above the ascending trend line to give us an opportunity to sell. And if price action continues to break the second ascending trend line, we shall look out for more selling opportunities around that area to maximize the potential of the bearish move. But as it is right now, the way the current market structure is, it's all screaming bullish as price continues to find higher highs and higher lows, and in fact breaking above our key level and also remaining above the ascending trend line. So we shall continue to hold on to the bullish buyers here unless price breaks down the ascending trend line and the $90 level to incite a sell-off in this market. So this is what we shall be looking at on the US oil spot for today, and that simply means that our center of focus is basically going to be between the $90.50 and of course the $90 area. So this is my view here on the US oil spot for today. So if you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move right into the next financial assets on our watch list. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so in the absence of no questions, I want to assume that we are all on the same page, so permit me to move right into the next financial asset. So the next asset on our watch list here is the USTech100, popularly known as the NASDAQ. And in fact, we have a very interesting setup here. But before we go into the details here, it is appropriate that we scale up into the higher time frame to look at the current market structure from an holistic standpoint so that we can correlate the market structure with what we have on the 1 hour time frame. Now, scaling up, I think we started on the daily time frame. Yes, we started on the daily time frame. Now, on the daily time frame, I captured the nature of price action activity since the beginning of the year. And since the beginning of this year, it's quite clear that price action has been on a strong bullish momentum. And after connecting the series of higher lows, we have a beautiful ascending trend line to emphasize this momentum. And of course, this line here is going to be one of the parameters we are going to be using to guide our trading decisions for this week. Now, if we take it a step further, zooming into the nature of price action since the month of June, I was able to identify a key level at the 15,150, which we shall be using as our key level for this week. Now, as our key level is right now, you will see how this level here had played a major role in determining the direction of price action in the last 3 to 4 months. Now, look at what happened here in the month of June. We saw how selling pressure came in. We saw what happened there. We saw sellers attempt around this area one more time, but unfortunately it failed as buyers broke out of that structure. So you can see how this level has been determining the next line of action. We saw what happened here. We saw the breakdown. We saw a fake breakout here. We saw a real breakout here. And in fact, in the last couple of weeks, price action had remained above that key level at the 15,150 to emphasize that sellers are finding it difficult to break through that area. And considering the fact that price remains above our ascending trend line, we shall continue to look out for more buying opportunity at this point unless the market states otherwise by breaking down both the key level at the 15,150 and the ascending trend line to incite a sell-off. Now, to capitalize on uptrend scenarios at this point in time, we need to take into consideration what has been going on here in the last couple of weeks. In fact, we'll go to as far back as the month of July, as you will see that we notice that despite the strong uptrend scenario in this market, we have been seeing lower highs as price action gradually contracts to form a symmetrical triangle. And from a technical standpoint, a breakout of this resistance line should be a beautiful signal for us to capitalize on an uptrend scenario. And of course, you can see how that resistance line also shares a beautiful confluence with that descending trend line. However, if we look at the distance between where price action is at this point compared to that resistance line, you will see it's over 280 pips. So are we saying that we have to wait the whole 280 pips to happen before we now finally see an opportunity to buy if the bullish momentum is going to be the case? Of course not. So what we are going to be doing here is to see how the market participant has been reacting to both the ascending trend line here and the 15,150. As you will see, we're at a crucial juncture where price is right at a confluence. So we will need to scale down to a much more lower time frame to see things very, very clearly and see how market participant has been reacting to that structure. Now, scaling down into, let me see, I think I have something on the 4 hours time frame. Okay, right on the 4 hours time frame here, I was able to identify a bullish trend line since the mid-month of August, as you will see. And to further emphasize how crucial the area where price is at this point in time, you can see how it also shares another confluence with that ascending trend line there. Now, to see what's going on here, we'll scale down into the 1 hour time frame. Now, on the 1 hour time frame, let's see what has been going on since this new week began. Now, if we scale down into the 1 hour time frame, this was what I was able to identify here. Now, the first thing you would observe here is the fact that price has been confined within a range that's between the 15,233 and the 15,195. Now, this is a flat range here, and this further emphasizes the level of indecision in this market at this point in time. Now, you know how we do it in this community. When price action falls into an indecisive phase such as a flat channel like this, we want to exercise patience, waiting for either the breakdown of the structure to happen to give us selling opportunities, or we wait for the breakout retest of the resistance line to give us an opportunity to buy. So in that regard, we are going to be using this range here as a guide for our trading activity for today. So this is where our center of focus is going to be. So we shall remain patient and let's see how, if a breakout retest will happen, then we join the bullish momentum at the 15,233. But if price breaks down to 15,195, then we will be looking out for selling opportunities here. So this is how we are going to be managing our trade on the USTech100 today. Now, there is a caveat to this whole structure, which I also want us to include into our arsenals as we get prepared for the New York session. Now, I said here that we are going to be selling below the 15,195. Now, we can actually sell before the breakdown of that structure happens. And that is the reason why we can do that is simply because of this ascending trend line we spotted on the 4 hours time frame. As you will see, price has continued to respect that trend line even into this week. Now, if price will break down that trend line and retest it at any point in time today, where we see signs that buyers are finding it difficult to climb back above that ascending trend line, then we shall see this as an opportunity to join before we now have another sell stop order below the 15,195 to maximize that move. And if it so continues to the downside, then a further breakdown of the 15,150 will be welcoming more opportunities to maximize the potential of that bearish move. So that is the only condition we are going to be using today to sell. But if price goes on to break out and retest the 15,233 zone, we shall be looking out for buying opportunities here. So you do want to be marking out these levels and structure on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So I will be, if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section, or you need me to do any clarifications as regards to my explanation, let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, we shall be moving right into the next financial asset. So, I saw your comment here, 663876. Good morning to you, and thank you for checking in on us. I saw your comment here too, 1276501 and Selimba85. Good morning to you all, and thank you for checking in. So, moving on right now. So, the next asset we are going to be taking on today is my favorite, and that is the XAUUSD, popularly known as the gold spot. Now, we have an interesting setup gradually unfolding before our eyes right now. But before we go into that detail, I would like to share with you some of the important parameters that led into this situation we find ourselves right now. Now, let's scale up into the daily time frame. Now, on the daily time frame, we get to see things from an holistic standpoint, and in fact, we've talked about this countless times, especially for you who have been part of this community for a while on this asset. Now, it is quite clear that price has been bullish since last quarter of last year. As you will see here, price continued to find higher highs and higher lows. Now, there is something interesting that came up last week that we saw here, and it came in the form of an uptrend continuation pattern in the form of a falling wedge. So we have the impulsive move all the way into the structure, then price transitioned into the falling wedge. And whenever we see this kind of pattern from a technical standpoint, is a clear sign that buyers are likely going to be pushing price to the upside. And in fact, to be able to capitalize on such opportunities, we want to be seeing a breakout of that resistant line of that pattern to retest, possibly to capitalize on that uptrend scenario. However, it is not all the time that this kind of pattern forms. It's a theoretical pattern, of course. There are still times where price does not respect this pattern and instead drops to the downside. We're also going to be taking that into consideration. So this is the first thing I saw here on this chart. Then in addition to the falling wedge are a couple of parameters here. So if we look at the nature of price action since the beginning of this year, you will see how the 1,900 area had been a strong demand zone in this market. Now, despite the fact that we saw lower highs, let me show you, we connected a series of lower highs here to give us this trend line. So despite the fact that we saw these lower highs in this market, which of course reveals the character of the sellers in this market, we are yet to have a confirmation that truly the sellers are likely going to be dictating the pace. And the reason why we are yet to get a confirmation is simply because we are yet to see price action take out all the buyers around the 1,900 area. As you will see in the past here, whenever price comes into this area, we saw how sellers struggled and buyers took over the market. The same thing also happened here in the month of August, as you will see here. And during the end of last week trading session, we saw what happened. As soon as price got into that area, we saw buy pressure resume again. And as you can see, all these parameters are gradually signaling the potential that price may likely break out of that descending trend line to respect the trend continuation pattern and push price to the upside. Now, to help us guide our decisions for this week, I was able to identify a key level sitting at the 1925 area. And of course, this level here is going to be one of the parameters we will be using to guide our independent trading decision for this week. Now you know how we use our key levels here. So you can see how that key level also shares a confluence with that descending trend line right here. So when price remains above our key level, we want to be looking out for buying opportunities. But if price drops below the key level, we look out for selling opportunities. And thank goodness the key level here shares a confluence with that descending trend line. So a breakout will definitely be a good opportunity to capitalize on an uptrend move. Now, to help us guide our trading decisions for today, we will need to scale down into a much more lower time frame so that we can see how participants in this market has been reacting to this key level, this very important confluence since the beginning of this week. Now, to be able to see this, we shall be scaling down into the 1 hour time frame. Now, on the I want to I think I have a structure on the 4 hours time frame which I would like to share with you first of all so that we can all be on the same page here. Now, this is the structure I have here on the 4 hours time frame. It now makes things a little bit clearer for us to see what is going on in this market and where the momentum is shifting to. Now, if you look at the structure on the 4 hours time frame since the month of July, it's quite clear that price has been bearish. As you will see, we had lower highs, and when we connect them, we have a couple of descending trend lines here, which of course has been supporting this bearish momentum in the last 4, 5, 6 weeks now. Now, there is something interesting here. The lowest point price has gotten to is the 1,885, as you will see here, and that was in the month of August 23rd. And the next attempt of the sellers to break down the structure was later in the month of August, and in fact last week's trading session. As you will see, all attempts to go lower was negated at the 1090 area. Now, the appearance of a higher low in this market is a sign that buyers are gradually gaining momentum. Now, in order for us to confirm that this momentum is valid, we will need to see price break out of this descending trend line, probably retest it to inside an uptrend scenario. Now, if you look at where price closed last week, you will see that it closed right around the 1,925, interestingly sharing a confluence with the descending trend line. So this is why it's important for us to look at the lower time frame to see how market participant will be reacting to that key level to determine where our next line of action will be. Now, scaling down into the 1 hour time frame, things becomes a little bit more clearer here. Now, the first thing first here is a bullish momentum since last week Thursday. We have a trend line to emphasize that, and what this simply means is that price remaining above that trend line will continue to make us feel comfortable looking out for buying opportunities. Now, in addition to that trend line, we saw how the new week started on a bullish momentum. We saw price started around the $1,922.50 level, which happens to be our support line for this week, and we saw price rise into the $1,930.50 zone. And as soon as price tested the $1,930.50 area, we begin to see selling pressure resume around that area. Now, giving us a scenario where price is confined within a range right now between the 1,930 and the 1,922 area. Now, you know how we do it in this community. Whenever we have this kind of flat range, which further emphasize the uncertainty in the market, we want to exercise patience, waiting for either the breakout or the breakdown of that range to give us an opportunity to trade. Now, let's go into the details of the structure the market appears to be gradually evolving into. Now, if you look at the structure closely, you will see here that during the last day of last week on Friday, we saw here that as soon as price got into the $1,930.50 level, that was on Friday, we saw selling pressure resume around that area. Now, it appears that the same thing is happening right now. As you will see, in the last 4 to 5 hours, price came into that level and selling pressure resumed again. Now, if we take the persistent selling pressure around the $1,930.50 level compared to in correlation with the impulsive move that brought us to this point, you will see how it appears that price action is gradually transitioning into a reversal pattern in the form of a double top structure. And whenever we identify a potential double top structure like this, you know how we do it. Next thing we do is to identify the neckline, which interestingly shares a confluence with the support line for the week, where price started this week at the $1,922.50 level. Now, as technical traders here, for us to validate this reversal pattern, we will need price to break down the neckline, retest the structure to incite a downtrend move. Now, this is one expectation here we will be looking forward to take advantage of a bearish move. Now, let's see if we can capitalize on a selling opportunity even before the breakdown of that structure happens. Now, to do this, let me clear this right now to make things a little bit cleaner. So you do want to be marking out the $1,922.50 level, as it will be serving as a potential neckline if this old price movement transitions into a reversal pattern. Now, right now, in the last 3 hours, you can see our price has been oscillating just right above that ascending trend line, which of course been supporting this bullish momentum. Now, I would like to see how the market will react to this trend line probably in the next couple of hours. And if we do have a breakdown, something like this, breakdown retests, giving me confirmations that buyers are finding it difficult to climb above that trend line, then I will be looking out to sell probably below that key level at the $1,922.50 level, 1,925 level, then have a sell stop order below the $1,922.50 area to capitalize on the downtrend continuation. So this is how I'm going to be selling the XAUUSD today. Now, considering the fact that price is on a strong bullish momentum so far, at least in the last 1 week now, we cannot ignore the potentials of buyers too. So in as much as we position ourselves for selling opportunities here, let's open our view to the potentials the buyers also have. Now, if you look at the structure closely, you will see that this $1,930.50 level had been a major barrier since last week Friday for the buyers. Now, for me to consider buying the XAUUSD this week, I would rather want to see a breakout of the structure where price will take out all the sell positions around this area, and this will reflect on the chart as a breakout, then some liquidity which would reflect as a retest of structure to join that uptrend continuation. So you can see how we shall be looking out for buying opportunities above the $1,930.50 level and ensure we have our stop losses sitting anywhere below the trend line or close to the key level. So below the trend line is quite okay. We should be having between 40 to 50 pips stop loss depending on your portfolio size. So this is my view here on the XAUUSD for today. So we have a simple setup to play with for today. We have a range price confined within the 1,930 and the 1,922. So you do want to be marking this out on your chart. Draw out the ascending trend line and let's see how the market is going to be reacting to this level. And don't forget to mark out your 1,925 level, as we shall be needing them as a reference point to guide our independent trading decisions. So this is my view here on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds while you also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, we shall be moving right into the next financial asset on our watch list. So, the next asset on our watch list today is the USDJPY. And in fact, it's been a while since we did anything on the USDJPY in this community. And well, I've been monitoring these assets behind the scenes. However, I'm beginning to see some intriguing developments in the market as downside pressure seems to be subsiding primarily due to the recent statement from the Bank of Japan's policymakers. They've made it clear that any exit from their ultra easy policy hinges on wage and inflation data meeting their expectations. And this, of course, is leaving the Japanese yen potentially vulnerable against its rivals and most especially the USD JPY. Now, what is tough for us for the USD JPY for this week? In fact, I have conducted an analysis on this asset, and in fact, I would like to take you back into the higher time frame where we want to look at what has really been going on in this market since the beginning of this year. And of course, if you look at the structure closely, it is quite clear that price action has been on a strong bullish momentum. Now, here is where this thing gets intriguing. Recent development, like I said earlier, emanating from the Bank of Japan have tilted the scales in favor of the US dollar. And from a technical standpoint, we find ourselves in a scenario where sellers seems to be gradually losing that momentum. I think we will see this very clearly on the 4 hours time frame. So let's go to the 4 hours time frame here. Now on the 4 hours time frame, you will see this is the zone I was talking about. This is the zone right here. You will see that price had fell into a consolidation phase around this. Okay, sorry. Let me mark this out better. This is no ordinary zone here. It's a territory where the Bank of Japan made a significant intervention last year. Now, the looming fear of another intervention has cast a shadow of indecision over the past month. So, this uncertainty is reflected on the chart, manifesting as a consolidation phase amidst a resilient US economy. Now, after though at the beginning of last week we saw this huge breakdown, we saw this engulfing move to the downside, and which was as a result of the hawkish comment made by the Bank of Japan's governor. And during the course of the week, the comment was actually the Bank of Japan is on the verge of dumping their ultra loose monetary policy by the end of this year. But during the later part of the week, we had that the policymakers are insisting that this monetary policy is the right thing for the economy. And as a result of this, people are beginning to gain their confidence in buying the USDJPY back again. And as a result of this new interest, we have been noticing higher lows, though in beats, not in it not wasn't huge, but in beats we begin to see some higher lows happen last week, resulting in this ascending trend line we have here. And this ascending trend line here is going to be one of the major parameters we will be using to guide our trading decision for this week. Now, in addition to the ascending trend line, you will see here that price action is forming an uptrend continuation pattern in the form of a an ascending triangle. So I would like to mark this out for you to see. So we have something like an ascending triangle here. And whenever we see ascending triangle formations on the chart, it's a sign that buyers may at one point in time break out of that resistance line to finally incite that uptrend continuation. Now, if you look at what has been going on here since the beginning of the week, you will see that that resistance line, buyers have been pushing, knocking that ceiling, and at some point I believe that it's going to cave in to make way for another wave of bullish momentum. So at this point in time, I want to be seeing a breakout of the 147.950 to incite an opportunity to buy this asset. However, in as much as we're looking out for buying opportunities in this community, you know how we do it here. We always want to keep tabs with the opposite direction too, as well. And just in case the market goes the other way, we also want to be on standby to capitalize on that move. Now, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers too. Now, if you look at the structure, like I said earlier, this area here has been a strong selling niche since the beginning of this week, of this month. Now, if this selling pressure persists, a breakdown of this ascending trend line could incite a momentum shift. It could be a partial one where we see the retest of the trend line to incite a bearish move, probably into the 145 area, which will be dovetailing to a minimum of 250 pips to catch them if price moves in that direction. Now, to further look at what is really going on around this area, we will need to scale down into the lower time frame to see how market participants are reacting to that key level at the 147.950 and the ascending trend line that has been supporting this bullish momentum since the beginning of this month. Now, scaling down into the 1 hour time frame, we begin to see things clearly. So I saw a pattern here this morning as to how the market participant has been reacting to this current structure. Now, since the beginning of this week, I was able to notice the confinement of price action within the 147.89 to somewhere close to that resistance line we talked about on the higher time frame and the 147.600. Though within this channel here, it's quite clear that price has found lower highs and lower lows within the structure, but something interesting happened about 4 to 5 hours ago. Now we saw here that as soon as price tested the 147.600, we begin to see buy pressure resume around that area. Now, what makes this more intriguing is the fact that the 147.600 also shares a beautiful confluence with that ascending trend line. Now, the question at this point in time is, will the ascending trend line be respected one more time? Will it still be strong enough to negate all sellers' attempt here to push price to find new highs? Now, we are going to be looking at how price reacts to the zone. And in fact, we begin to see some signs that buyers are trying to gain some momentum around this area. As you will see here, we saw the nature of the sharp rejection of the zone a couple of times during the early hours of today. And since then, price has remained around that area, giving us clues that sellers are struggling to break through that area. Now, if this continues, we are likely going to be looking out for buying opportunities to capitalize this uptrend move. And to do that, I want to be capitalizing on that move even before the breakout of the resistance line happens. So I am going to be having a level here along the 147.720. So you do want to be marking that level out on your chart right now, as we shall be using it as a reference point to guide an uptrend continuation. So I'll give this a little bit of a darker color to make it more unique than the other levels. So I will be looking forward to, if the buy pressure above the 147.600 persists, I will be looking for the breakout retest of the 147.720 to add a buy positions, while I will be looking out for more opportunities at the breakout of the 147.890 and the 147.950 to maximize the potential of this bullish move. So this is how I'm going to be joining an uptrend continuation in this market. Now, in as much as we're looking out for buying opportunities above the ascending trend line, of course, this is where we want to be looking out for buying opportunity. We cannot ignore the potential that sellers could break down that ascending trend line. And in fact, if the breakdown of the ascending trend line happens, I would like to zoom this out so that we can see what is looking like since the beginning of this month. So in fact, if price action will break down the ascending trend line, this will be the first time price will really break down that structure since the beginning of this month. And of course, this will be a beautiful signal that sellers might likely going to be coming in. So for me to consider selling the USDJPY today, I would like to see the breakdown of that ascending trend line. And in fact, a breakdown of the ascending trend line would also have broken down the 147.600. Now, if we scale down into a lower time frame after the breakdown and we begin to see selling pressure around this area, then this will be a beautiful sign that buyers are finding it difficult to climb back above that ascending trend line, hereby giving us that confidence to join a bearish move at this point. So this is how we are going to be managing our positions today on the USDJPY, and as you can see here, we are at a crucial juncture in the market, exactly around the 147.600, a level or a zone which shares a confluence with that ascending trend line. So depending on what happens here will determine what our next line of action will be. So you do want to be marking out these levels, and let's see how it plays out. If buy pressure persists, then we look out for buying opportunities above the 147.720, while we look out for more opportunities at the breakout of that resistance zone. But if price breaks down the 147.6 and the ascending trend line, then we look out for selling opportunities below the structure to capitalize on that bearish move. So it's a simple setup we have here, and I hope that we'll be on standby to capitalize on that opportunity when the moment comes. So this is my view here on the USDJPY. I hope you marked out those levels. You need to do that so that you can have something as a reference point when price gets into that zone. So if you have any questions whatsoever as regards to what I talked about so far, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds to see if there are any questions before we draw the curtain for today. All right. So I'll take this as a confirmation that we are all good to go. So it has been a wonderful moment with you guys today. And in fact, we were able to treat 4 major financial assets before we ran out of time. And in fact, making us have a wider options to choose from during the New York session today. So we were able to attend to the USOILSPOT, the USTech100, popularly known as the NASDAQ, the XAUUSD, popularly known as the gold spot, and of course the USDJPY, and all of which we were able to identify simple setups using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insights into these markets, and of course help us to strategically position ourselves ahead of the New York session. So I encourage us to Use the zones and patterns and structures we've identified today as a yardstick to guide our trading decisions. And of course, you do want to remain patient, wait for your structures to mature before jumping into any positions. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you get in understanding how things works here and eventually be able to use the information you have gathered here to make your own independent trading decisions. So I'm very confident that we are ready for today's trading sessions as we've simulated all the potential opportunities that could likely happen. So I wish us all the best of luck as we continue to monitor price action. Looking forward to seeing more of you tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, as we come back here again tomorrow to review how well this asset have been doing and at the same time get ready for tomorrow's New York session. Do have a wonderful evening, everyone. Bye bye.